Hi, and welcome to this handout, calculating the net asset value for a mutual fund. So you may have a mutual fund in your portfolio, and you may wonder, how is this priced on a daily basis? And you'll notice that with mutual funds, you don't see a price change during the day. It occurs once the market is closed. And once the market is closed, they simply take the shares that the mutual fund owns of each of the stocks and the closing price of the stock, multiply the shares by the closing price for each of the stocks in the portfolio. They find the total fund assets. They divide by the total shares in the fund, and that's how they calculate the net asset value. So the fund assets divided by the outstanding shares is what we call the NAV, or net asset value. So if you had a mutual fund with, say, could have 60 different stocks inside the mutual fund, they just do a calculation, adding up the total value of all those stocks and dividing by the amount of outstanding shares to get the net asset value. So as each individual stock goes up or drops, we get the total. At the end of the day, we get the total. So some stocks may fall, some stocks may rise, and then hopefully more stocks are rising than the stocks that are falling, and you have more shares of the stocks that are rising, and you can see the net asset value change in a positive way every day. Now, what if it's a closed-ended mutual fund? So a closed-ended mutual fund is different. Where open-ended mutual funds, the amount of outstanding shares can change. So if they have new people that want to invest in the fund and they bring the money to the fund manager, he can issue new stock shares at the current net asset value and let them into the mutual fund. If it's a closed-ended fund, that's what CEF stands for, so it can trade at a premium or discount. So the premium or discount depends on where the share price of the closed-ended fund is compared to the net asset value. So closed-ended fund share price, the share price of a closed-ended fund can trade like a normal stock during a day, can actually separate from the net asset value, the total value or book value of the mutual fund. So in some cases, this closed-ended fund share price, because the closed-ended mutual funds trade more like a stock than a mutual fund, and they're valued consistently during the day based on supply and demand of people purchasing the limited amount of shares the closed-ended mutual funds have, and they don't have the ability to expand their shares. So if new people want to buy into their closed-ended fund, it's going to raise the demand and raise the price of their shares. So in this case, if we're going to say that this was a closed-ended mutual fund that's trading at 1018, to calculate the difference, we would take the net asset value, we would take the share price of the closed-ended fund's share price at any time that we're looking at 1018, and then we subtract that from the net asset value, and then finally we would divide it by the net asset value. So it's closed-ended share price minus net asset value, and that the result of that would be divided by the net asset value. And here we see that this closed-ended fund is currently trading at 12%. So why don't you take a minute to pause this video and try this example right next door. Okay, so if you tried this example, the first step would be actually calculating the value of every stock held within the mutual fund. After that, we would want to calculate the total assets of the fund. So to do that, there's a nice little auto sum here button I can press, and that just automatically will calculate that for me. And you can see the formula up here. Otherwise, I've seen plenty of students just kind of go like this: plus, 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 and they get the same result. But that's a little bit longer. It's much easier just to hit this auto sum button and get the result. Okay, so I'm going to take the total funds, divide by the outstanding shares, and get the net asset value. Now let's figure out, this is net asset value if it was an open-ended mutual fund, but let's say it's a closed-ended mutual fund with a share price of $6.29. So already we know it's going to trade at a discount, but let's find out how much of a discount it's going to trade at. So if we remember the formula, we're going to take actually let me just rescale that so you have the letters and the numbers before I put the formula in. Okay, so if we look at this formula, C19 minus D13 divided by D13. So that's closed-ended share price minus net asset value divided by net asset value. So here, I'm going to start the calculation out. I'm going to use a bracket so I can get a more accurate, because I need to have my order of operations would make this a wrong answer, but I'm putting it inside the parentheses so that I make sure that this subtraction occurs first before I divide by the net asset value. And we see here that we have a negative 52% reduction in a discount of the closed-ended fund share price. So basically what it's saying is that this is the real net asset value, but it's currently it's 50%. It's 50% off trading at a discount. And that's why we say premium or discount. So here would be a premium of 12% or about $1, and here we have a discount of roughly half at 52%. Okay, so that is the basics of how you calculate the net asset value for an open-ended and closed-ended mutual fund, and calculate the premium or discount for the closed-ended mutual fund. I hope you found this YouTube video helpful, and I'll see you again soon.